Allow me to start us off with a word of prayer. Let's pray. Father, we are thankful for this day that you've given us the gift of life. Thank you for this session that we have, and we pray that you be with us throughout the session. In Jesus' name we pray. Amen. So we are excited to have you join us as we unpack key insights on pension schemes and retirement planning. This webinar will run for approximately 60 minutes. And we want to invite you to just feel free to engage with us. Put in any questions that you have on chat, any reactions or any comments that you might have. The chat box is open, and would be very happy to be able to engage with you. So as we start about, we want to introduce our panelists. We have two great panelists with us today. The first one is Simon Kibira, who is the head of pensions at Britam. Simon.
Good morning, viewers.
And we have our second panelist, who is Phoebe Nahanu. She's a senior pensions relationships person.
Good morning, viewers.
Yeah, so as we start off, please feel free to put in any questions that you have. On the chat box, you'll see a link and a QR code. So as we go along, we'll ask you at some point to be able to scan that QR code or to click on that link so that then you'll be able to engage on one or two questions that we want us to focus on. So over to you, Simon.
Good morning, viewers, and welcome once again to this session. We're really excited to have you here this morning, and we want to appreciate you for joining us. We do realize that you have other commitments that you've dropped this morning to be with us, so we don't take it lightly, and we say thank you, asanteni sana. I'll speak briefly to Britam, the organization. Britam was established in 1965, and on that note, we are this year celebrating our 60th anniversary, so we invite you to celebrate with us our birthday, 60th birthday. It's not a small feat for an organization that has been in existence for 60 years. We pride ourselves with a lot of knowledge and lessons that we've learned throughout those years that bring us to where we are here today. We are currently in several markets within the region. We're in Uganda, we're in South Sudan, we're in Malawi, we're in Rwanda, Tanzania, and we're also in Mozambique. We will be shortly looking at moving into other markets, and we will always ensure that we keep you updated on the markets that we'll be entering as we proceed with our expansion in the region. As Britam, we are guided by our purpose, and our purpose is to safeguard the dreams and aspirations of you, our customer, and also of our employees. So we are really strong on ensuring that everything that we do on a daily basis is to ensure that you're safeguarding your dreams and your aspirations. We have a vision that guides us our every movement, and our vision is to ensure that we are leading diversified financial services company in our chosen markets across Africa. We have a mission, and this is a mission that has been with us for many years, and for those who've been our customers for several years can attest to this, that with Britam, we walk with you every step of the way. We do not want to abandon you during your hard times, and we also want to be with you during your good times. We are guided by values as an organization, and these values speak to why we are able to offer services to your customer, and one is to ensure that we offer accountability. So we offer accountability to you, our customer, by ensuring that you have visibility of your pension with us. You're able to receive your statements on time. You're able to understand how your pension contributions are invested, etc. And our panelists today will be talking to this so that we're able to understand better some of these items. Trust is very important. And with trust comes accountability. So we believe that by being accountable to you, then we build trust with you. Agility is a very big concern for us when it comes to our values. And we are seeking to be agile in every movement that we make with you, our customers. We want to be agile. We want to ensure that we react to markets. We want to make sure that we react to happenings within our industries so that you're always safeguarded and that we take the turn as soon as we realize that we require to take that turn. Customer centricity. What we say at Britam is that you, our customer, are the center of everything that we do. So customer centricity is very, very important. And with that, we ensure that in every step that we take, you are our focus and we focus on your needs. As Britam, we have several areas where we will be operating. Today's webinar will be speaking to pension specifically, but it's good to mention that we're also very big in insurance, that is life insurance and general insurance, health insurance. We're also big in investments, where we have an asset management arm that takes care of our investments, and where you're able to invest your funds short-term or long-term and access very, very competitive returns. We also have a new baby on the block who we call Britam Trust. And Britam Trust is, we're offering you, our customers, an avenue to be able to safeguard your future by ensuring that what you have earned today lives into the future and can be transferred to your generation seamlessly. In terms of our accolades as Britam, we've won the Aki Life Insurance Award for 18 years consecutively. This is an area that we're very proud of. It's not a small feat to win an award 18 years consecutively. We're looking at winning it again this year, to a 19th year, looking on to the 20th. And we know that this would not be possible were it not for you, our customers. So we so thank you to you, our customers, for ensuring that we are able to earn these accolades and to pride ourselves together with you, our customers. We are licensed by the Insurance Regulatory Authority, and we are also licensed by the Retirement Benefit Authority. In terms of our focus today here, we are here to discuss pension, and I'll speak briefly just to a few areas of pension. And one of those areas is that we are, as I said, we are regulated by the Retirement Benefit Authority. And as a regulated entity, it means that your interests with us are safeguarded from any areas that the RBA may not be comfortable with. So we ensure that we comply with RBA requirements on a day-to-day basis. And this safeguards where we invest your money, how we invest it. We also are able to offer robust and regulatory double-digit returns. This year, we offered you a return of 13%, and we are confident that moving into 2026, we'll be able to sustain this double-digit return. Before my panelist Phoebe comes in, I also want to mention that as Britam, we invested in systems, and the systems that we invested in are to ensure that we're able to offer you platforms with which you're able to self-service. We have come up with portals where you can be able to service yourself as a customer, and also where if you're an employee, your employer is also able to service you as an employer. So we have a corporate portal, and we also have a retail portal where our customers are able to self-service themselves. We were aware that recently the government has allowed you to be able to contract out your NSSF Tier 2 contributions. And as Britam, we are licensed to take these contributions. So we want to encourage you to consider, talk to your employers for those who are employees, and for those who are employers, to consider contracting out your NSSF Tier 2 to Britam. We have a dedicated team that handles this. It's a very simple process, and the team that we have on board will be able to take you through this process and ensure that you contract out. So feel free, even as we continue, to just let us know on our chat platforms and the other platforms that will avail if you would want to take this route, so that we can be able to support you to contract out and again safeguard your dreams and aspirations with Britam. My colleague Phoebe is going to take us through the session today. She has quite a lot that she wants to tell us, and as she comes in, I want to confirm to you that you will not get bored. Please make sure that you remain glued to your screens. Thank you.
All right, thank you so much, Simon. Good morning, everyone. It's a pleasure that you've taken time to join in on this webinar. It just shows your commitment to securing a financial freedom in retirement. And we hope that from today's session, you'll be able to understand the options that are available to you and make informed decisions to ensure a dignified life in retirement. So in the next few minutes, I just look forward to empowering you and giving you confidence that yes, you can retire comfortably in retirement. So why does pension matter? There's some statistics that were done by the Retirement Benefits Authority in 2024. According to that survey that was conducted in 2024, we learned that 54% of pensioners were receiving less than 20,000 shillings per month as their pension. Now, if you calculate 20,000 shillings per month and you have expenses in retirement, it means this money is quite little to sustain you or to ensure that you have a comfortable life in retirement. So this just calls for us to work and improve on our savings culture to ensure that the kitty we'll have at the end of the day will ensure we have more than earning 20,000 Kenya shillings per month. Now, for those who had retirement savings, 57% of them felt it was not enough. Yes, you get to retire from active employment or from working, but then your expenses do not retire. And these expenses need to be met on a daily basis. So those who are in retirement felt that that savings was not quite enough. And this was mainly attributed to during their working life, when they were exiting or changing employers, in as much as there was that allowance of accessing part of their contribution, this affected the final fund that they have at the end of the day. And many of them had regrets about accessing these benefits and were of the opinion they shouldn't have accessed their benefits at that time. And some also felt they should have increased their contributions, because when you make additional contributions to your pension savings, then it means that the kitty you'll have at the end of the day will be significant enough to ensure that you have a comfortable life in retirement. So from the interactions that we at Britam, we pay pensioners a pension every month. That is on the 26th of every month. So these are just some of the emotions that we learned from these retirees who are receiving pension. Some of them felt that they really had financial challenges because expenses were there to be met, but their income had decreased. So these emotions really gave them a lot of panic and also stress, because they felt, I can't comfortably retire because my savings are not enough for the retirement I thought and wished I could have. Then you find that in retirement, there are medical expenses that you need to pay for as a retiree. This medical can only be possible if you have money that can be able to pay for these medical expenses. But then again, you find that, yes, you have medical expenses to pay for, but you worry that, yes, you might live long, but the savings you had were not enough to take care of these healthcare needs. So it is important that if these are some of the emotions those in retirement are currently grappling with, then you need to think about it critically as an individual. So whether you're starting out in your career or approaching retirement, it is important to think about your retirement today. And just to pose, I'd like to pose a question to the audience. What comes to your mind when you think of retirement? You can interact with us through the QR code or through the link that has been posted on the chat so that I get a feel. I see someone there is saying, Uze, not productive. Okay. Thank you for those comments. Rest. All right. There's someone who feels rest. Loneliness. Oh my. Okay. That loneliness we will not be able to assist, but maybe on other. Relaxation, stress-free. Okay. Traveling, start anew. Wow. Yes. Traveling, starting anew. Yes, you can be able to do that. Vacation, freedom. Yes, thank you, our viewers. Those are very good comments coming through there. So for me, I define retirement as leaving employment or stopping work. Because right now, all of us have the privilege of working for an employer, or maybe we are the ones who are the employers of various individuals. So when you're working, there are some privileges that you enjoy as an employee. Some of those privileges are like you have a regular and predictable income. You know, at the end of the month, I can go and greet that ATM and retrieve some cash so that I can be able to cater for my needs. So you are sure that income is predictable and it will come. Then you have the privilege of a structured schedule. Yeah, some of us, maybe we wake up at 6 and get to work by 7. Others wake up at 8 to get to work by 9. So that's a schedule that you have determined or is determined by yourself because of the routine you have to deal with on a day-to-day basis, be it taking your children to school, going to work, then in the evening you get home, discuss with your spouse, your children, and how your day was. So that's a structured routine that you are used to, and it is a privilege. Then you find you get access to benefits such as health insurance, you know that at the end of the day, if you fall ill, there's a medical cover that can cater for your health insurance. Some of us have the privilege of airtime allowance or leave allowances. So these are the gains you have. These are the privileges you have as an individual when you are in employment. Now, from the comments you gave me about retirement, that person who thought about traveling and starting anew, I believe they were looking at retirement as a gain, that it is an opportunity to retire and get to do that, the passion that you had during your active years, that you have the time and the energy to just now focus on those passions. And some of us will feel it is a gain, it is a time for us to now focus with our family. They try and mend relationships with our families, because in retirement, those are very important relationships that we need to ensure that they are still there. Some of us will also take it as a time to rest, reflect on your life's journey, and then also think about giving people advice, or so that they don't make mistakes that you made, so that they get to also avoid them. You also get to gain freedom from deadlines, whereby everything was urgent from your colleagues, from your employer. But those are just but a few of the gains that you get to enjoy. So it's important that you carefully think about your retirement and start planning for it today. And as Britam, we are registered by the Retirement Benefits Authority to offer retirement benefit schemes. Now, a retirement benefits scheme is a platform that ensures that you are able to save regularly and invest in your old age, so that you have dignity in retirement. In the event of your demise, the beneficiaries are able to access the accumulated benefits paid out to them as a lump sum. Now, this retirement benefit scheme operates under the Retirement Benefits Act of 1997 that established the Retirement Benefits Authority. The Retirement Benefits Authority is the regulatory body that oversees what happens in the retirement benefits sector. The whole purpose for this body is just to ensure that member funds are protected and they are not lost, thereby leading to loss of member funds and having to lose or rather be stressed in retirement because their benefits were mishandled or mismanaged. So their work is just to supervise and ensure that whatever savings members are making towards their retirement is not lost, but it is protected at the end of the day. So of these benefits that you are contributing currently, they are your savings, but you can access your benefits on the basis of withdrawal. That is, you have separated with your employer before attaining retirement age. You can also access your benefits based on immigration reasons. And another reason of accessing your benefits can be due to ill health, because you cannot continue being in active employment. You can also access your benefits on retirement. You've reached the retirement age and now you want to go and rest and enjoy your life in retirement. And in the unfortunate event of your transition, then your beneficiaries are paid 100% of your benefits. Now, for withdrawal before retirement age, and retirement age in this case refers to you have not attained the minimum retirement age by law, which is 50 years, or you have not attained the retirement age of the scheme, which differs from employer to employer. Some employers' retirement age is 55 years, others 60, others 65. So in case you have not attained retirement age of 50 and above, then you are accessing your benefits based on either resignation purposes, dismissal, or you have been declared redundant due to an retrenchment. So the law allows you to access a maximum of 50% of the total contributions you have made to the scheme. And these contributions exclude NSSF, because NSSF deductions are only accessible at retirement. So when you're accessing your benefits, the 50%, which is not a must to access, because remember when I began the presentation, I alluded to the fact that a lot of retirees regretted accessing their benefits early. So if you can opt not to access your benefits, the better. But if you really have to access your benefits, you'll only access a maximum of 50%. Then the remaining 50%, the choices that you as a member are left with is to transfer the balance of the fund to an individual pension plan, or you can transfer it to your next employer's pension scheme, or alternatively, you can leave the fund in the scheme and it will continue accruing interest. Then the other option of accessing your benefits is you are exiting the country. You can access 100% of your benefits, but this is subject to you providing key documents such as a permanent resident approval letter or a permanent resident card or immigration visas. And these documents we provided will show that you are exiting the country and you have no intentions of coming back. So the whole idea is we want to, or rather the regulator wants to ensure that when you exit the country and come back, you are not going to have to really be a frustration to the society because you don't have money in retirement. Then you can also be paid out 100% of your benefit in case of ill health. This is where you are diagnosed with illness and you cannot be in active employment. So we will be able to pay 100% of your accumulated benefits. The other option is in retirement. In retirement, you are entitled to 100% of your benefits, and retirement can either be early retirement. I had mentioned that the early retirement age by law is 50 years. Then you can retire on the normal retirement age. This is the age that is stipulated by your employer, or you can retire on basis of late retirement. So when you're accessing your benefits at retirement, you are entitled to 100% of your benefits. Now, these benefits that are payable to you, when you're in a pension scheme, you are entitled to a maximum of a third as a lump sum. Then the remaining 2/3 is converted into a retirement income plan. If you are in a provident fund, you are entitled to 100% of the benefits, but you get to choose how much you want to put into a retirement income plan and how much you want to receive as a lump sum. Then in the event of your demise, your beneficiaries are paid 100% of your accumulated benefits, and all this will be based on the beneficiaries that you chose in the times of enrollment, or during your time you made some changes to your beneficiary listing. We will pay your nominated beneficiaries 100% of your benefits. One thing to remind you about is that your pension benefits do not form part of your estate, so they don't go through the succession planning. We only pay your appointed beneficiaries according to the percentage that you had indicated. And it is important that you think critically about who is your beneficiary. That person who will suffer the most when you are not there. It is important that you nominate them as a beneficiary and they get to receive your savings in the event of your transition to the afterlife. So as I earlier alluded to, the Retirement Benefits Authority oversee the retirement benefits sector. Now, one of the reasons why they oversee the retirement benefits sector is to ensure that Kenyans are saving for retirement. And to incentivize Kenyans to save for the retirement, there are some tax reliefs that you enjoy as a member if you're saving for your retirement. You get to enjoy a relief of up to 30,000 per month tax deductible contribution when you are saving towards a pension scheme. If you opt to set up a post-retirement medical fund, you also get to enjoy a maximum of 50,000 tax deductible contribution. So in short, the regulator is telling you, you have 45,000 shillings at your disposal to take advantage of so that you reduce your tax liability that you pay every month, and you get to ensure that you have secured financial independence in retirement. And another incentive that currently came recently in December 2024 is that any member who is accessing their benefits based on retirement age enjoy a tax relief on their benefits. That is, you will pay zero tax when you're accessing your benefits on retirement basis. Before this came into effect recently, only individuals of 65 and above enjoyed the relief. So it was brought down to anyone accessing their benefits on retirement, that is early retirement, normal retirement, you get to enjoy tax relief on your pension savings. And if you've been in a pension scheme for more than 20 years, you also get to pay zero tax. So this is something available to you which you can take advantage of. You can defer accessing your benefits before age 50 so that at retirement, you will pay zero tax for your benefits. Because when you're accessing your benefits and you have not attained age 50, or you have not been in a pension scheme for less than, you've been in a pension scheme for less than 20 years, the taxes are quite punitive just to discourage access of benefits. And the punitive taxes are you pay 10% on the first 288,000, 25% on the next 100,000, then 30% on any amounts above 388,000. So you can opt to defer accessing your benefits just to pay zero tax to the government and ensure you have more take home when you are accessing your pension benefits at retirement. So it is important that you take advantage of these solutions that are available to you. And as you do so, keep up to date on how your financial goal is coming about. You can do so by tracking your savings through our Britam pension portal that allows you to check on your details, the details that we have about you, are they correct? And you can also update your personal information such as your beneficiary. I would like to pause and just ask you on the chat box, and by scanning this QR code, do you have access to the self-service platform? You can interact with us on the QR code or on the chat so that we get to understand that indeed this available platform is beneficial to you. Okay, I see majority of you are saying yes. Okay, that's good to know. All right, some are saying no. All right, for those of you who are saying no, you do not worry. After today, you'll be able to access your portal, and we'll give you a step-by-step guide on how to access your portal. So to access the member portal, you click on the link captured there. Once you click on that link, it will take you to the sign up option, whereby you get to key in your ID number and then you register. Once you register, then you'll be given some prompts that you'll follow, and then you'll be logged in. And that's the quick step-by-step guide on accessing our portal. So log in today. In case you encounter any challenges, please feel free to reach out to your HR team, or if you have the contact of your relationship manager, you just drop them an email. They'll be able to assist you to set up your online account and start tracking how your contributions and benefits are accruing. Then you also get the opportunity to update your beneficiaries. Some of us, when we join employment, we captured a beneficiary, and as time goes by, our beneficiaries have changed. Please update your beneficiary, and this is at your fingertips now. You just log into the portal and indicate your preferred beneficiaries. And in future, then you'll have access to your statement. Now, when you access your statement, this is just a snippet of how it will appear. The statement shows your bio details, and the statement that you are accessing, is it for 2024 or 2025? Then it will show the breakdown of the products you have under the pension scheme. These products range from your pension, and here pension, we use it interchangeably with the provident fund. Even if you're in a provident fund, this should not cause an alarm to your end. Pension will, the word pension will work for both pension and provident. So that's the contributions that you're currently making towards your retirement savings based on the contract letter that you signed with your employer. For the employers who have gone a step ahead and liaised with us to contract out NSSF Tier 2 contribution, your statement also shows how much NSSF contribution has accrued to date. And those individuals who have also started saving for the post-retirement medical fund, then your statement will also get to show the accumulated post-retirement medical fund. On the statement, you'll also notice that there's a breakdown on the contribution type, whatever you as an employee are contributing, and you can also make additional voluntary contribution, which is captured there as AVC. Then you also have the employer contribution, and if there are any AVCs from the employer. Now, these contributions are classified into two categories. They are either registered contributions or unregistered contributions. Now, the registered contributions are the tax allowable contributions that you make at the point of contribution. Remember, I mentioned about the 30,000 per month tax relief you get. They are classified as registered contribution. Now, any amounts above the 30,000 Kenya shillings are classified as unregistered contribution. So that is how your statement will look like. And from this statement, you get to see the pension breakdown and the NSSF breakdown. So in retirement, when you have now attained retirement age, what options do you have to ensure that you also get to enjoy the salary that you are used to while in employment? You have the option to choose between an annuity plan and an income drawdown plan. So an annuity plan gives you an income for life that is paid to you for the rest of your life, but the payouts are also payable to your next of kin in the event as a retiree, you are not there. So the period can range between 5 to 20 years, whereby the payouts will be payable to your next of kin in case you are not there. However, if you outlive the guarantee period that is stipulated in the annuity contract, there's no need of alarm. You'll still be receiving payout from the annuity plan. Now, in case of your transition to afterlife, nothing is payable to your beneficiary. Now, the annuity amount you receive at the end of the day is based on various factors. Number one, it's based on your age. The older you are, or rather, the more aged you are at retirement, then the more the payout. Where when you look at also in terms of gender, the gender between male and female, male tend to receive more annuity payout than females. The reason being is statistics have shown that women tend to live longer than men. Then the payout will also based on how much have you accumulated at retirement. If you have accumulated 3 million and that's the amount you are using to convert to a retirement income plan, then there's another individual who has 5 million of this and they're accessing an annuity plan. The one with 5 million will be receiving more payouts than the one with 3 million. And you can also opt to take the annuity plan jointly with your spouse, so that if you're not there, then your spouse starts enjoying the annuity payout in your absence. Then the other alternative is the income drawdown retirement income plan. This plan gives you an option that you get to choose the flexibility of how and when to receive your payout. And within a year, you are allowed a maximum of 12% of your fund as access to retirement income plan. Then the balance of that fund is reinvested and continues accruing interest. Then in the event you transition into the afterlife, your beneficiaries are paid the balance of your fund as a lump sum. It has a minimum lock-in period of 10 years. After the 10 years, you get to choose whether you want to continue with the drawdown plan or you want to convert it to an annuity plan or access the balance of your fund. So the other option at retirement is the post-retirement medical plan. Now, this post-retirement medical plan is a fund that you get to create while in active employment. I had mentioned you have a relief of up to 15,000 per month tax deductible contribution towards a post-retirement medical fund. So these savings go to the post-retirement medical fund is usually abbreviated as PRMF. It goes to the PRMF. It accrues interest. Then in retirement, you get to convert it to a fund that caters for your medical expenses, or purchase a medical insurance cover that can be able to be paid out annually and as and when need arises. So I'll pause there just to request you, our viewers, to help me understand whether you are confident about whatever you are currently saving, and it will ensure you will sustain your lifestyle in retirement. We can just interact on the QR code or on the chat box so that I get a feel of the confidence level of our members today. Okay, I see someone saying there they need more time. Majority of you is saying you need to boost your contributions. For those who are confident, there are not so many. All right. Okay. So yes, you can boost your contributions to ensure that you get to sustain your life in retirement. And you need more time. It means you have to do a lot of more additional voluntary contributions, because time waits for no man. It's important that you start today, start now, so that you get to save significant contributions that can ensure you have a comfortable life in retirement. So this is a projection of how much you need to start saving to ensure that you have accumulated enough in retirement. If your enough in retirement is earning an income of 100,000 per month, then my dear viewers, you need to ensure that you have at least 14 million in retirement. Now, for 14 million in retirement, if you have 20 years to retirement, then you can work with 20,000 per month. But if your years to retirement are lower, then you really need to pull up your socks so that you're able to meet that target. So this is just a projection that can help you think about that lifestyle you are dreaming of in retirement. To sustain that retirement, then you need to plan for it, because if you don't plan, then you're planning to fail, and we wouldn't want you to fail in retirement after all the years you have been in active employment. So start thinking about that income that you think you will require in retirement, and make the necessary adjustments in terms of your savings so that you ensure you have enough at retirement. So as I am almost concluding, I just want to remind us that it is important that you remain up to date with your contributions. So ensure that you are receiving your annual statements, the ones that we share with you from every April and May, once we have declared our interest, and be informed and updated on how much you had contributed and the interest that it had earned. Then also ensure you attend the annual general meetings that we usually send out to encourage you to just join in and understand how are the performance of your benefits and why the return that you got at the end of the day. Then think about making additional voluntary contributions, because these ones will boost your savings. And consider having a post-retirement medical fund. This one is specifically towards ensuring you have a fund to take care of your healthcare needs in retirement. So after today's session, I just wanted to understand from our viewers, what actions are you most likely to take after this session? All right, we are interacting on the QR code or on the chat so that I see some are saying they will increase their contributions. They will seek financial advice, share this knowledge with colleagues. That's very good. I see a majority of you are ready and willing to increase their contribution so that you get to boost your savings. That is very important. You now have the information that can help you have dignity in retirement and not live in regret as an individual. And as Britam, like Simon had alluded to earlier, we are available to help you make financial decisions that can ensure you have dignity in retirement through the multiple solutions that Britam offers as a company, and we will not shy away from assisting you make informed decisions. And from time to time, we'll continue having such sessions where we get to give you information and updates about what is happening in the retirement benefit sector, so that you are up to date with what is happening. And don't hold on to this information to yourself. Share it with other colleagues who didn't manage to join this session, and also to your relatives, so that we work together to ensure that we get rid of black tax that has been there from time immemorial. Then yes, log into your portal, learn how your funds are accumulated and are growing from year to year, and ensure that everything that you are, or rather every contributions you're making, are received and posted correctly. So as I close, I just want to remind you that the retirement you dream of tomorrow begins with the choices that you make today. A comfortable retirement built on thoughtful planning will ensure that you have comfort, freedom, and independence, so that your older self will look back at you with a smile and say, thank you, indeed, you took up the initiative to ensure that I retire comfortably. Thank you so much. Back to you, Komu.
So thank you, Simon and Phoebe, for a very comprehensive walkthrough of pension. And maybe to our audience, we could give maybe a thumbs up. If you've learned something or if you picked something new today, you can click on the reactions and give a thumbs up to our panelists. I think for me, one thing that is certain for all of us is that at one point or another, we shall all retire. And therefore, I'm really glad that our panelists were able to give us a good brief of insights on what we need to do just to be able to be ready, to be able to prepare for that time when it comes. And one of the key highlights that I've picked from what they have taken us through is on the need for financial security, which the pension solution that Britam has is able to take care of that for us, so that then you have a stable income at retirement. The peace of mind that you know that there is something that you'll be able to live on after retirement. There are also the tax benefits that are there when you take up a pension plan with Britam. And so I would want to encourage us to increase our contributions, keep engaging with us whenever we have this webinar, so that then we get to learn. I want to appreciate a couple of members in our audience who have put in the comments on chat. There's Grace Kimani, there's Rose Kanyere, there's Stella, Ernest, Millicent, Egla, and many more. So thank you for making this very interactive. Let the questions keep coming, because we will still give responses even after this session is done. I'll pick 2 or 3 key questions and allow our panelists to be able to give us their feedback on them. Allow me to read. So I have 2 questions. How do I update my beneficiaries? So this is a question that has come up from quite a number of the audience. So how does one update their beneficiaries, as well as how does one access pension statements? So I'll have Phoebe speak to that. Phoebe, you could give us a response.
All right. So you can log into the portal like from the link we shared, and we are also putting the link on the chat box where you can log in. If it's your first time interacting with the link, just click on sign up, then you'll get the prompts on registering for the online portal. Then on the online portal, you can be able to access your statement. On your far left, there's a part written member reports. Under the member report, you can generate a statement so that you get to see what is your return or that was credited to your 2024 statement. And then for the 2025 statement, it will show a 5% minimum guaranteed return. That's the interim statement, because currently the financial year is still ongoing. You can also update your beneficiaries on the portal. On the same far left, there's a part written manage my beneficiaries. When you click on that option, you'll be prompted to change the beneficiaries that are already captured that were initially captured. Then you get to update your beneficiary, indicate their relationship to you, their age, and also their proportion. Then once you've done all that, you can click on save and your details will be updated.
So thank you, Phoebe, for that very comprehensive question. Probably I'll get to see whether Simon has any additional comment on that.
Thank you, Komu, and thank you, Phoebe, for that very comprehensive answer. I think the only thing I can add is maybe just to emphasize the reason why you need to update your beneficiaries. You do realize that for some of us, the first time you gave us your beneficiaries has been a while. So you may be having outdated beneficiaries, and this comes a lot when we are faced with instances where we have claims, where we have members who at the last minute we realize that they had not updated their beneficiaries accordingly. So it's good for you to always keep updating these beneficiaries. And Phoebe has indicated it's very easy for you to see who's your beneficiary today, and you can be able to update it. Secondly, also, we know that some of us get blessed with newcomers into this world, and sometimes they were not there when you had put up the beneficiaries. Some of us get married and such other commitments. Some of us also get out of these commitments. You may get divorced. So it's good always to ensure that your beneficiary are updated, so that then your funds that you've invested so hard are able to be accessed by the right people when the right time comes. Thank you so much, Komu.
Thank you, Simon, for that feedback. Allow me to read two other questions. So someone has asked here, if I have turned 60 years and I need to withdraw my pension, what are the requirements to be able to access my pension benefits? And an additional question, is it possible to transfer our savings or my savings from NSSF to Britam? So I'll have Simon also speak to those two questions. Simon.
Thank you, Komu. Thank you very much. So I think that the first thing that may be to clarify is that today the law is a little bit more flexible. So you can be able to access your funds as early as age of 50. But for you to access these funds, if you're in an employer scheme, then you have to complete a withdrawal form through your employer, who will confirm to us that you've actually left employment. And once they confirm that you've left employment, then we'll be able to process these funds. Our commitment is that we will pay this within a maximum of 10 days after receipt of full documentation. If, however, you're not in an employer scheme and you have an individual personal pension, then you will come directly to us. You can do that again by filling in a form and submitting it to us, and we'll ensure that that is processed within the 10 days. We are also working on to ensure that our portals are able to run these withdrawals. So very soon, hopefully before the end of the year, you'll also be able to do your withdrawals from the comfort of your home. And then the process will run digitally from your end to your employer to us. And for those who are not in employer schemes, then it will come directly from you to us. Again, our commitment is within 10 working days maximum, you will be able to receive your funds. Thank you. Phoebe, do you want to add something? I know there's a second question, but on that one.
All right. Yes, just as Simon has put it, you can access your benefits, but the key underlying principle, especially for the employer-sponsored scheme, you must have separated with the employer. Either you have attained retirement age and now you are accessing your benefits. Then when you're accessing your benefits, we'll also guide you on thinking about taking up a retirement income plan, because a retirement income plan will ensure that you have income in retirement. So you get to choose whether you want an annuity plan or an income drawdown, so that they're able to sustain you in retirement and you get to enjoy that income even as you transition into retirement.
So thank you, Phoebe, for that feedback, and Simon as well. We appreciate that. There's a key question that has come from one of our yes, Simon.
Sorry. So sorry for the confusion, Komu. So yeah, so there was a second question which I had skipped, was on handing over to Phoebe. I think as we had indicated earlier, Britam is certified to take up your NSSF Tier 2 contributions. And if you're a scheme, if you're an employer, if you're a scheme, then you're able to contract out from NSSF. There's a very simple process where, as I said, we have dedicated team members here who would be able to guide you through the process. And but just to elaborate a bit, is just to say that what you need to do is we will give you the necessary documentations for you to fill in. Once you fill in the forms, we will walk the RBA journey for you to be contracted out from NSSF. Once you're contracted out, then you'll be able to start making contributions to Britam. And also you'll apply to NSSF for them to have your past contributions with NSSF transferred to your new pensions NSSF Tier 2 company, which will now be Britam. Thank you, Komu.
Thank you for that clarity, Simon, and that's very important. There's a question on post-retirement medical fund, and I'd want Phoebe to speak into it because this is a question that keeps coming up. How can a member start to make contributions towards the PRMF, and when will they be able to access it? Phoebe, you can give us a bit of insight into that.
Okay. So the post-retirement medical fund is a savings platform that helps you save towards catering for your medical expenses in retirement. So in order to start saving for this post-retirement medical fund, you reach out to Britam, whereby we share with you an enrollment form for the post-retirement medical fund, and then you indicate your details. Then once your details are shared with us, then you notify your employer to start deducting you contributions that we will receive on Britam and post as post-retirement medical fund. So these contributions will continue earning interest up to the point when now you have attained retirement age. Then you convert the savings into a medical insurance cover, which will work in the form of receiving an annuity payout that will be able to help you pay for your medical insurance. Because remember, medical insurance is paid annually. So you'll set up an annuity plan that will now be able to pay the annual premiums that will be requested of you to be able to enjoy the medical insurance relief. Now, in the event that you transition, your beneficiaries will be paid the accumulated post-retirement medical fund as a lump sum. For them, they will not need to use the funds as post-retirement medical fund. That fund is specifically for you as the individual.
Thank you, Phoebe, for that. To engage with this post-retirement medical fund, it's a very good solution towards taking care of your medical insurance at the point of retire. So as we come to the end of this webinar, I would like to extend my heartfelt thanks to our panelists. They've been very engaging with us. Also want to thank our audience. Thank you. Without you, we would not have managed to do this, and I want to appreciate that you put in your questions, you've engaged us on chat, and you've really been a sport. So I want to appreciate that you've taken time just to be with us for this session, and we want to encourage you that for every other session that we share, you can share it out with your friends, with your colleagues, let them be able to join in so that then we are able to have a conversation. Retirement planning is a journey, as we have had, and today's session is just one step towards making it easier for each and every one of us, and so that then both me and you, we can all secure our financial future, especially at retirement. So on behalf of Britam, thank you so much for joining in, and we look forward to seeing you in our future engagement. We shall be sharing the presentation that has been done. We shall share it out. And please continue putting in your questions or comments on chat. We shall attend to them even after the webinar is done, so that then you are able to have an answer to whatever question that you have. Thank you very much once more, and have a good day.
Okay.